Hello everyone, we are back with you for the market update for May, so let's get started. May was a positive month for the markets, so all XSpot Wealth portfolios performed as expected. Our global growth plan with 100% exposure to equity indices is up 9.81% since the beginning of the year. The growth plan with 80% exposure is at 7.89%. While the growth ESG plan recorded a year-to-date return of 11.08%. The balanced portfolio, which is a 50-50 split between stocks and bonds, is up 5.24% since the beginning of the year. Lastly, the income distribution plans had another positive month, with income portfolio recording returns of 4.3% year-to-date, while the high income plan achieved a gross return of 16.48%. Now, some of you may have heard the phrase, sell in May and go away. But for now, it seems that the opposite has happened, as we had a positive May that saw gains in markets around the world. We are now in the early days of June, with US markets hitting new record highs, while the interest rates remain at the highest levels in the last 2 years. This is where I would like to focus, as we believe that after 2 years, we are at a turning point, after which some interest rate cuts will follow. As we speak, the European Central Bank has cut interest rates for the first time by 25 basis points, and this will probably bring chain reactions from the rest of the central banks. Inflation seems to have stabilized again and is set to move lower in the next few months and eventually inch closer to the 2% target for both European and the US central banks. This is yet another indication that we are very close to the first rate cuts. Usually in these scenarios, we have seen that markets continue to move higher, so we will have to wait and see. Now, talking about a market that has suffered a lot in the last 2 years, which is the global bond market. Our eyes are on the bond market as the decisions to reduce the interest rates could work positively, and we could also see bond prices moving upwards in the next 6 to 12 months. We believe that we are at a critical point where investors should be cautious because a potential rate cut, given the dynamics of the economy, could extend the equity rally even further, and we could see higher gains in the next 2 quarters. So far, the markets have developed as we have described and expected in our previous analysis videos, and we are in a good place to continue to enjoy the gains of the markets and to stay bullish on equity markets, but with an interest in bond markets as well, which could offer a more positive upside for the near future. Thank you for watching this video. Bye for now.